I'm looking at some really interesting data coming out from San Antonio's multifamily market. So first, number one, San Antonio is the fastest growing large city by percentage in the country. That's tremendous. It's also added 26,000 jobs over the past 12 months. That's a 2.2% increase, which is really amazing considering the fact that the overall job market in the country has been quite weak over the last year or so. Also, San Antonio's unemployment sits at 3.7%. That's well below the US unemployment average. So, and it kind of goes on and on. There's some really amazing things happening in San Antonio from a demand perspective. You've got population growth, job growth. That also leads to wage growth. And all these things are great from a multifamily investment perspective because this is the demand side, where if you have demand for living in a certain area and people are making more money, they have good jobs, they're able to pay more in rent, and that leads to the increase in cash flow as well as increase in property values. But of course, there's another side of the equation. There's demand and there's also supply. And this is critically important and something that sometimes gets overlooked until you can't ignore it anymore. And San Antonio, unfortunately, right now is a prime example of this, where I just read you the headlines. There's some really amazing things happening from a demand perspective, but perhaps equally amazing but not good is the supply story, which is that in the last year and a half, there's been less than 10,000 units absorbed, which I'll explain what that means in a second, and nearly 20,000 units added in supply. That means that apartment developers have really been building a ton of apartments in San Antonio, and only about half of them are being absorbed, which just means actually being rented and added to the occupied pool of apartments. And what that means now is there's many more apartments that are sitting vacant and that are fighting for a select amount of tenants. So even though there's so much growth in the area, developers have outpaced that growth and they've built more apartments than the city needs at the moment. So you've got this big supply-demand imbalance, which unfortunately leads to rents going down, concessions going up, where different apartment communities are competing with each other for the same limited amount of tenants, so they're offering discounts like, for example, a month free in rent or 6 weeks free and things like that. So those are concessions. Also, occupancy goes down, rents go down. So here in this data, it shows that over the last 2 years, occupancy in San Antonio has gone down by almost 3%. Effective rents have gone down by 3.4%. And I'll tell you from firsthand experience owning and operating in the market, it feels a whole lot worse than that. And that's because supply and the fundamentals are not evenly distributed across the country or across a market or even across submarkets, right? Real estate is block by block. So you can see these fundamentals and dynamics play out much more directly in the different pockets that you're in. So this is unfortunate news for San Antonio multifamily investors. But the good news is like everything, this is only temporary. And like many markets, the supply market operates as a cycle as well. So in 2020, 2021, and 2022, debt capital was abundant and valuations were high enough to where apartment developers could build an apartment complex and it would be worth so much that they would have a great exit. So it motivated them to build more and more. But now those dynamics have been going in reverse, where actually land is still very expensive, construction costs have gone up, and values are down, which means, and also it's very difficult to get financing. So for developers, it's been a very difficult environment to build anything new. So for the last 3 years, there's been very few construction starts, which means that in 2026, 2027, 2028, there's going to be far fewer deliveries than there were before. So we're actually going to, funny enough, go from an oversupplied market to an undersupplied market. So hopefully in that period of time, apartment owners can kind of make up for the lost time and the lost rent and lost occupancy with kind of a rebound in rent growth and occupancy and performance, because that demand story is still strong and it's still there. Population's still growing, jobs are still growing, but then the supply story is muted. And that is kind of what a lot of investors are looking out ahead and actually buying today based on that premise coming forward. However, it's not so easy to buy when the opportunity is best, because kind of like how they say, when it's the right time to buy, you won't want to. And that's because it's emotionally difficult to buy in the face of negative headlines, negative performance, as well as negative emotions. Usually the best buying opportunities are right on the heels of when there's bad results. So if you just invested in a deal and it turned out poorly, you're likely, just based on human psychology, to say, well, that didn't work for me. I'm going to swear off this investment strategy and never do that again. But in reality, because things are cyclical, the thing you swore off at that time, it just could have been perhaps a timing thing. And now is the perfect time to actually get in at the bottom and ride it up to the top. But human psychology is always working against us, convincing us to buy in at the top, to buy high when things are frothy and everyone's excited and everyone's winning. And then when things crash, we get depressed and we sell low. Despite humans getting smarter and smarter every year and AI and so on and so forth, we're only human and we have human psychology. So market cycles, unfortunately, driven by human behavior and psychology, are here to stay. And to prove that here in the data, it's very crazy actually. In the first half of 2025, this report says that there's only been 13 multifamily properties in San Antonio that have traded. That's down 13% from the first half of 2024, and it's down a ton back in the boom times of 2021 and 2022 when there was over 100 deals being sold per year. So the point of this whole video is to show you both sides of the equation. Don't get carried away by one certain headline that looks amazing and ignore the data that might tell you the full story.